Hey everyone, Darin Triolo here with Triolo Realty Group at Keller Williams Realty. We're coming up on the last month of the second quarter, and I wanted to just share a quick market update. We are getting tons of calls from our clients, whether they're buying or selling. If they're buying, it's, Darin, geez, how do I win in this market? Am I buying at the worst possible time? If they're selling, it's where do I price my property? How do I maximize the value? Did I miss the boat? All of these questions are really great questions. So what I'd like to do is just share a couple of graphs to kind of walk you through how I kind of share this information with our clients. So let me share my screen here. And the first graph I want to talk about is just inventory. So this graph tracks all the way back to 2004, and this is the number of homes for sale over time. So it basically takes the highest amount of inventory in any given year and puts it on this graph. So we are today at 3,005 homes for sale in all of San Diego County. The lowest inventory we've ever had was earlier this year at 1,200 homes for sale. So although we've gone up in inventory 150%, we are still at historically low inventory. Now, this is important because what's interesting is right now, the psychology of the market is starting to shift. What I mean by that is buyers are getting frustrated because they've been competing in multiple offers for like the last 2 years. Sellers are getting a little too overconfident because they're used to hearing about all their friends that sold with 20, 30, 40, 50 offers on their homes, especially at the beginning of the year. That was the case. And so it's really interesting. It's hard for our clients to kind of catch up to the psychology of the market. Just over the last 2 to 3 weeks, we have noticed a significant slowdown in the number of showings and the number of offers on our listings. And it seems to be a consensus with a lot of my colleagues that are doing a lot of business as well, is that they're still getting very well qualified, very motivated, very great offers. In fact, some are still bidding over list price. In some cases, they're bidding way over list price, depending on the neighborhood. But there's just not the volume. Instead of 15, 20, 25 offers, it's 2 to 8, maybe 10 offers. So even though that doesn't sound like a big shift, it is based on where we've been and where I think we're going. We're also in the middle of our selling season, so it's normal to expect more inventory right now than we would, let's say, 2, 3, 4 months ago. So again, that's the inventory side of things, and inventory is continuing to go up. So we're going to keep tracking that, because obviously if inventory keeps going up and the demand starts to drop off, then we're definitely going to see some sort of like a leveling out. We're not quite there yet. Next slide is mortgage rates. So this is another factor that's impacting our current market, right? Rates at the beginning of the year were as low as 3.5, 3.7. Just since March until now, we've seen a 37% increase in mortgage rates. That is the most extreme increase in mortgage rates in a short period of time that we've ever experienced. Obviously, a lot of us are feeling all the inflation, and the Fed is, I think, behind the times on increasing the short-term fund rate, unfortunately. But here we are, we're at roughly a little over 5% mortgage rates, which, again, having some perspective, if you look at that over time, we're still historically low mortgage rates. If I were to take this graph and go back into the 80s, rates were as high as 16%. Some of you may remember that. We've been below 7% for a long, long time. I bought my first home in 2002 and my interest rate was 7.5%. And that at that time, that was a really good rate. So again, historically speaking, still very, very low interest rates, even though they've gone up dramatically. I think that's helping us. It is definitely curbing some of the buyer demand because people can't afford as much of a home as they could when rates were at 3.5%. So that's also playing a factor in the market. And then the last slide, I just wanted to share the average values of homes in San Diego County. Just from the beginning of this year until now, we've seen the average sales price go up 19% just from the beginning of 2022. Now, this is across all markets, across all price points. I am definitely starting to see, I think that's going to slow down. I am already starting to see it slow down and level out. But as I'm sure you might know, every neighborhood is different. Every home is different. And so some markets in San Diego aren't behaving in the same way as other markets. And so it's really important to understand these are macro statistics, but what does it mean for you if you're buying in La Jolla, if you're buying in Chula Vista, if you're buying in Carmel Valley or Del Sur or Rancho Bernardo. All of these statistics are very micro market, and that's what you really need your agent to share with you when you get into it so that you can get a good game plan together. Same thing when it comes to selling. So if you have questions about what's going on in the market based on your specific circumstances, I would love to be a resource for you. I kind of geek out on all the stats, and I'm able to tear apart a lot of things to give you some good perspective on what might make the most sense for you to do. Feel free to reach out to me at 858-206-8000, or you can email me, Darin@triolorealty.com. Thanks so much.